I'm Oliver Sloup with Blue Line Futures. We're back at it again here today with another Tech Talk back-to-back days. It is, Wednesday, June 10th, and we are taking a look at live cattle. This is something that we touched on May 28th, and this is the exact same chart that we talked about and used when discussing that. This was this day right here, May 28th, and we talked about being optimistic, but really tempering the expectations at the top end of this risk range. And if you recall, this risk range really goes all the way back to this these lows and support down here from last August and September from that Tyson fire. It was the breakdown point here in early March. So a lot of interaction between the bulls and the bears at this 1 to 102 level. We failed to get out above that, which kind of led to some long liquidation from recent buyers at lower prices. Now, we have been upbeat against this support pocket in this gap from May 6th and 7th, but we're starting to get a little bit tired, and we mentioned that in this morning's Livestock Roundup and really over the past couple sessions. As you can see here, we're starting to round out a little bit, lower highs just by a hair and lower lows just by a hair. This is a must defend pocket for the bull camp here in the next couple of sessions. If we fail to defend this pocket, we would not be surprised to see a whoosh lower, and we could really look for a drop down towards 90. Now, on the fundamental side, we have also seen the cash market soften up. We've been seeing trades really all over the map today, anywhere from 98 to 108, but it is clearly softening from last week, and that has put a little bit more pressure on the market. The other thing we're keeping a very close eye on is the outside markets. Now, the cattle market didn't rally as hard or as fast with the stock market, which is a little bit of a caution flag. That's not going to be a one-to-one correlation, but the fact that there wasn't a little bit more excitement behind it is a little worrisome. Stocks pulled back a little bit today after Fed Chair Jerome Powell spoke, and I think that could potentially lead to some additional pressure in the stock market. And if that were to happen, we were to see a kind of more volatility in the stock market, I think that would lead to some accelerated selling in cattle. Usually when you get volatility in the outside markets, it spills into other markets. So the correlation on the downside might be a little bit more than on the upside, and I think the reason behind that is it just creates a little bit more panic in the markets, and it creates a sell first, ask questions later environment. So that's what we're keeping a very close eye on. Not as optimistic on live cattle or feeder cattle as we have been, and we'd actually started working in some short positions with clients that need to do some hedging, or maybe even on the speculative side as well. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.